CEOs say they find the shifting economic landscape a challenge. 52% say they are concerned about shifts in consumer spending and behavior, and 46% are concerned about new market entrants.
And something else that was interesting in this year's CEO survey was the increasing awareness that the BRICS and other emerging economies can't be treated as one brick. There are real differences in growth, speed, competition, and market dynamics that make each of these markets its own challenge to navigate amid a portfolio growth.
Let's look at, for example, urbanization. More than half of humanity today lives in cities, and that in turn is going to, in itself, drive enormous changes in demand patterns, in the way people buy stuff, in the way they live. And so because of that, with this rise of urbanization, we have to recognize the fact that the majority of that is going to happen in the global growth markets. And that means that if you take the example of Indonesia or Nigeria or across the geographies, any country, the capital city, just by virtue of the fact that it is the magnet, is going to be growing pretty much at double the rate of national GDP. And what that means is that the opportunities that throws up in logistics, in infrastructure, in consumer products, in real estate and so on will continue to be fairly good investment sectors to be looking at and investing in.
So these huge economic shifts between and within countries are resulting in equally momentous changes in consumption patterns. Dennis, why are these changes such a challenge for today's business?
Well, in a nutshell, CEOs have to chase a moving target. There are new types of consumers with more diverse and demanding needs. At the same time, they are fighting off increased competition from unexpected sources. Additionally, they need to do it right for each of the geographies they want to serve. There's no copy and paste approach for entering these markets and seizing the massive opportunity created by the rise of the middle class in emerging countries. Before setting their market entry and consumer targeting strategies, businesses should make it a priority to know the political, economic, social, technological, legal, fraud, corruption, cultural risk landscape for each market, and those are just to name a few. And then, of course, you need to keep monitoring trends and changes in markets far away from home, even after you're already established there.
You're right, Dennis. The environment and understanding the environment in which you operate makes a huge difference. At the same time, companies can't ignore their mature market consumers. Their needs and buying patterns are also changing, so companies have to continue to innovate to keep them happy as well. Using big data, modeling analytics can help leaders better understand the changing needs of consumers and shape offerings accordingly. They can listen to social networks to learn what people, and not just consumers, think about their company and their industry and sense market shifts. They'll also learn whether they need to engage with consumers more actively and provide services in new ways and channels.
You know, Fia, successful companies also pay attention to their supply chains, specifically building greater resiliency right across them. So you could be asking yourself, is your supply chain flexible enough to help you serve fragmented customer segments in different ways without becoming so complex that you lose oversight of the risks? Do you have enough redundancies in your supply chain to match the shifting consumer demands? And can you work with supply chain partners to identify those demands? Do you have full visibility of your supply chain partners? This last point is also really important, as a business's reputation can collapse due to the behavior of its supply chain partners. Look, consumers today have and share much more information about the companies that they do business with than in the past. So reputation risk is high for businesses that don't align with consumer values. Your reputation is formed by all stakeholders, and it will be based on the impact of your business activities on those different stakeholders. Do you have a way to monitor your business impact on consumers, the environment, shareholders, communities, close to home and far away? People are demanding more accountability and openness. Are companies willing to be more transparent in communicating the result of their business activities with all stakeholders? Look, getting this right is the key to trust and to more sustainable continuous growth. And as you and I know, Fia, it's very important to resilience.